Let's go back to the very beginning. When the very first person reached down and picked up a yellow rock that was gold, it wasn't worth anything. It was a yellow rock, and initially it had zero value. In ancient times, other than its decorative value, which was sort of a collectible, there was really no value, right? I mean, they didn't have microprocessors and electronics back then, 5,000 years ago, so gold had no value. So as soon as someone, the very first person, traded someone a lump of yellow gold in exchange for something else, or as soon as somebody acquired the gold, planning to give it to somebody else, they effectively monetized gold. That means gold went from being worth nothing to being worth something because it had a monetary premium. Now, in the case of gold, its monetary premium is almost in the entirety of its value because there are not very many industrial applications where gold is that much better than anything else. And obviously gold has decorative value, but it primarily has decorative value because it's scarce. So the very first time gold became money, that somebody used it as a store of value, it acquired a monetary premium. So what Bitcoin is doing now is removing that monetary premium little by little in gold. And what I mean by that is every single person that buys Bitcoin instead of gold is helping Bitcoin establish a monetary premium, and they are removing that monetary premium from gold. So why does this apply to stocks and bonds and real estate? And the answer is because a lot of the premium in the price of stocks and bonds and real estate is actually a result of people using them as a store of value, people using them as money rather than for their utility value. The entire economy has been financialized, meaning there are tons of assets in the economy that have a significant monetary premium on them. They're using them in the way that money was intended to be used, as a store of value, but they can't use money because it's losing too much value. So they're putting money in stocks and bonds and real estate, including their house, instead. So as a result, all of those have a significant monetary premium. More and more people will realize that it does not make sense to store up extra wealth in their house, for example, because at a time like this, it's almost impossible to sell your house. Houses are very illiquid. That means it is very hard to buy and sell houses in the current environment. So everyone who thought their house would be a fantastic store of value because they could buy and sell it anytime they want is realizing that's not really true. That it's actually much harder to buy and sell real estate than they thought, because the real estate market goes through multi-year periods where it's very difficult to buy or sell real estate. So as people realize that it makes more sense to hold their wealth in Bitcoin, again, the premium that is on real estate as a result of people holding it like money will go away, and that premium will be reflected instead in the price of Bitcoin.